here's everything you need to know about the fair value gap report on edgeful.com. So here we're looking at YM, we're obviously looking at the fair value gap report, we're looking in the last 6 months, and we're looking at the New York session. So what does this report measure? It looks at how often is a bullish fair value gap mitigated versus unmitigated within this New York session. So what that means is, let me just go to this right over here. What that means is we're only looking at the price action within the New York session, within 9:30 to 4 p.m. And we are ignoring anything outside of that, which is really important. So any fair value gaps that form overnight doesn't matter. Anything that forms pre-market doesn't matter. Anything after hours doesn't matter. Now, another important piece is that if something, like in this case right over here, you can see there's a bearish fair value gap right over here. This was a few days ago. Now, this counts as unmitigated for this session because price did not come up and wick or close through this within this New York session here. Now, it did come up later, but this report only checks specific days where that's the day of. It's not going to check the next day or the following day or whatever else. So what this report really is measuring is how often is a fair value gap that gets created today get mitigated or unmitigated today. Very important that we're specifying today. Now, a bearish fair value gap is when the fair value gap is made when price goes down. So that's 3 candles like this, and I'm going to make this red right over here. So you can see this is a bearish fair value gap when there is candle 1 and candle 3 have that gap going downwards. Now this is a bullish fair value gap where price, let me just remove this, where price right over here, I'm going to make this green. So you can see here, there's the bullish fair value gap. It did get mitigated obviously right over here, but this is a bullish fair value gap. So when you're looking at this chart on Edgeful, you're going to see bullish fair value gap and bearish right over here. So just so you know what each of these actually are, this is the bullish and this is the bearish. Now, here I'm looking at a 15-minute time frame. Obviously, this is extremely important for what we're actually measuring because a 1-minute fair value gap is obviously different from a 15-minute. Now, I am using some indicators here, and let's actually go to today's, not the best example, but if we go to your indicators, you're going to have a fair value gap indicator that's part of the Edgeful plan. And then I'm also using the market sessions. So you can see right up here, those are the market sessions. And then if you want access to these indicators, you go over here, you click on this Trading View Access button, and you're going to put your Trading View username right over here. And the way you find your Trading View username is up on the top left. You're going to click on your profile button. You're going to see your username right there. Once you do that and you click update, you're going to see in your indicators this invite only will appear and you'll get access to all of these. Now, right here is a bullish fair value gap, a pretty small one, on the 15-minute time frame that's forming. Now, what you can see live is that price wicked through, but this candle hasn't closed through here yet. So this fair value gap will still stay visualized or like plotted on this chart. Now, here you can see, I'm going to try to find a decent example here. Here you can see is a bearish fair value gap that was not mitigated within this session. Now, what's really important with this specific indicator, and we do have to improve it, is that we haven't limited the fair value gaps based on session yet. So you can obviously see right here, this is outside the New York session, and you can see it's obviously still plotted there. What's important is you need to look at this indicator on the closer, on pretty much like today. And if you go to a 5-minute chart, this is a really good example here. You can see there's a 5-minute bullish fair value gap right here. You can see there's another one over here, but you can see that there's one that got mitigated, a bearish fair value gap that got mitigated with this candle here. So let me make this red quick, just so we can see. And the limitation around this indicator is that it's not going to plot the ones that have been mitigated already. So that's an important piece, obviously, to be aware of. So let's go back to edgeful, and I'm going to go to the 5-minute time frame so we can look at this. So I can show you what's actually happening based on live data that's happening right now. And you can see on the 5-minute time frame, 75% of fair value gaps that form are going to be mitigated today, which means, so how can you use this? It means that you can target once it forms, like this one did right here, and you see whatever, there's a level of support, level of demand, you want to expect a reversal, you can expect price to cross all the way through this fair value gap that was formed right here. Now, in this case here, theoretically, what this means is that you can expect price to cross back down into these fair value gaps. Now, obviously, you need to be careful. You can't target every single one, but if there are some that are higher time frame or some that you have a lot more conviction in, the report is telling you on the 5-minute time frame that it's very likely to get mitigated. Now, there is a very important piece here about the by wick versus the by close. So we're looking at the by wick stats right here. And what that would mean is, let me try to find an example here. Okay, perfect example right here. So you see this fair value gap that formed right over here. And let's just look at this area right over here. So I'm going to make this blue. Okay, let's look at this price action here. You see how this bearish fair value gap formed and then price came up, came back down, came up, and then wicked through it right over here. Wicked through it again, but never closed above this fair value gap within this box. So it did happen later down the following day, and that's why it's not plotting still. Actually, what I can do here is do this. So you can see that price never actually closed within this session, never closed above this point. So how does this relate to the report? If you're using the by wick mitigation criteria, this would be counted as mitigated. And mitigated means that price came up and then it went through it. So that means on a bearish fair value gap, price went up back through it. And then on a bullish fair value gap, that means price came down through it. Now, here you can see that there's not a single 5-minute candle that closed above here. And now on the buy wick, this would count as mitigated. But then if I go to buy close, this is obviously going to change. And now you can see 64% of the time, bullish fair value gaps get mitigated. 67% of the time, bearish fair value gaps will get mitigated on the buy close. So buy close means that here's an example, a perfect example of a bearish fair value gap that gets mitigated by close. Now, the indicator that we have only checks by close. So it's really important. We're going to upgrade it, but it only checks by close. And now you can see right here, there's obviously a bearish fair value gap that formed, and then this candle closed above it. And that's why this indicator is not plotting it, and so this is what it looks like normally. But that would count as mitigated bearish fair value gap by close. So pretty much, if you want to be a little more strict with your fair value gaps, you would use the buy close. If you want to be a little more loose and you want to be, you don't care about candle closing, then you can use the buy wick. So in this case here, the buy wick would have mitigated this one. The buy close would not mitigate this one. And the way to use this report is to be targeting specific fair value gaps. So if you see one print, and let's go back to today for a second. If you see one print, this is a great place where you can expect price to come back through the one right here. So if you have any questions on this, please reach out to our support down here. We can help you with any questions you have that are circumstantial, whatever else. It doesn't really matter. Just keep in mind that this is only specific by session. So it either gets mitigated or not today.